Hello students, today we are going to see chapter number 5, that is accounting equation and business transaction of standard 11 commerce subject account. So as we know that we are preparing account to know the profit and loss of the business. So here our objective to prepare accounting is to prepare the final account, and in final account, as we discussed before, that we are preparing trading account, profit loss account and balance sheet, and in the balance sheet we are trying to see our financial status. So balance sheet is having two sides. One side is a capital and liability and other side is a asset. So here in this chapter we are going to see that each and every transaction has effect in a final account. So in each and every transaction we are going to see how much capital is there, liability is there, and what is the total of asset. And as we know here that the balance sheet is having two sides. That two side is a capital and liability, and the other side is a assets. So here from this only we can come to know that capital plus liability is equal to assets. So here there is a accounting equation. That accounting equation is called A is equal to C plus L. So assets is equal to capital plus liability, and that is also from the transaction we are in each transaction we are giving two effect, and from that two effect we are passing journal entry, and from that straight here each and every transaction we are going to prepare the balance sheet according to this accounting equation. So here we are going to see that equation in the sum, and let's see the sum number 1. Here write the journal entry and give the effect of transaction and with the equation. So here we can see that there are the column called serial number, transaction, debit, credit, effect of each transaction, and asset is equal to capital plus liability. So this is the format of this sum. And here let's see the sum number 1, transaction number 1, brought rupees 50,000 and commenced the business. So here we know the journal entry that 50,000 is coming in the business. So cash account debit to capital account. So let's pass the journal entry. Cash account debit to capital account, and here it is rupees 50,000. So here it will be 50,000, and due to this transaction cash is going to be increase and capital also is going to be increase. So both will be increasing. So here we'll write very first thing cash of rupees 50,000 and capital of rupees 50,000. So total here we can see that A is equal to C plus L. So here we can see that both side total is a equal, that is 50,000 50,000, that we can see from the transaction itself. Okay, so this is, so here our transaction number 1 is finished, and okay, so transaction number 2, that is furniture purchase for rupees 10,000. So here furniture account debit to cash, that journal entry we are going to pass. And the amount is of rupees 10,000. So because of this, as we know that cash is going out of the business and furniture is coming in the business, so furniture is going to be increase and cash is decrease. So that two effect is going to come. So from here we can see that cash is of rupees rupees 50,000, that is going to be decrease, and that will be minus furniture purchase of rupees 10,000. So our cash account is now rupees 40,000, and here we can see that there is another asset in the business, that asset is called furniture account. So furniture of rupees 10,000 increase. So total of asset is rupees 50,000, and here capital is also rupees 50,000. So that now let's make the total of both sides, and that total is 50,000. So for that, so this is the transaction number 2, and now let's see the transaction number 3. So third transaction is a goods of rupees 12,000 purchased in cash. So for that, journal entry will be purchase account debit to cash. So because of the goods purchase, what happened, that the cash is going out of the business and goods is coming in the business. So goods is going to be increase. Goods is going to be increase and cash is going to be decrease. That effect is going to be passed. And here cash was of rupees 40,000, and from 40,000 minus goods purchase of rupees 12,000. So here we are going to deduct the 12,000 from the cash account, and that will be 28,000. And here again we can see that there is a furniture of rupees 10,000. So that 10,000 again we are going to write down, and afterwards we can see that we have brought the goods. So that goods is also a asset of the business. So that is called stock, and that stock is of rupees 12,000. So total of this is again is going to be 50,000, and here the capital is also 50,000. So total of this will be again 50,000. So this is the third transaction. Let's see the next transaction. Next transaction is a fourth transaction. Goods of rupees 8,000 is purchased from B. So this is a credit transaction, and because of this the liability is going to be increased. So here purchase account debit to B account, that journal entry we are going to pass. For the fourth transaction, purchase account debit to B's account, and here we have purchased the goods of rupees 8,000. So that is 8,000, and here because of purchase goods account is going to be increased, and liability is also going to be increased. And here we are going to write cash, because cash is not affected. So cash account 28,000 we are going to write. Again furniture account, that is of rupees 10,000, that is also going to be continued. And stock is going to be increased as we have purchased the new goods. So purchase, because of purchase, stock is going to be increased. From 12 we are going to add purchase, so that will be 8,000. So total will be 20,000. So here total of this will be 58,000, and here it is capital of rupees 50,000, and we can see that the liability side B's liability is going to be of rupees 8,000. So here we can see that 58,000 is assets, that is C plus L. So 50 plus 8, that will be 58. So here this is A is equal to C plus L. So this is the transaction number 4. Now let's see the transaction number 5. Goods of rupees 7,000 sold for 10,000 in cash. So here we have sold the goods of rupees 7,000. So 7,000 we are going to deduct from the stock, and remaining 3,000 is our profit. So we are going to add to the capital account. So here our stock is going to be decreased by 7,000. Cash is going to be increased by 10,000, and capital is going to be increased by 3,000. So here 3 effect is going to be passed for this transaction, and journal entry that we are going to pass, that will be cash account debit to sales. Fifth transaction. And it is of rupees 10,000. So here 3 effect is going to be from cash increase by 10,000, then goods decrease by 7,000, and capital is going to be increased by 3,000. So 3 effect. Here cash is of rupees 28,000 plus sales. So sales of rupees 10,000. So total of this will be 38,000. Then stock is of rupees 20,000. From 20,000 we are going to deduct the sales of rupees 7,000. So here, my dear student, we have to deduct only the cost of the sales, that is 7,000. So here the stock is of rupees 13,000, and we can see that there is a furniture. That furniture we are going to continue here with rupees 10,000. So total of this side will be 61,000. So this is the total. Now here we can see that capital was of rupees 50,000, and in that we are going to add the profit portion of the transaction. So that is 3,000. So total will be 53,000. Here we are going to write 53,000, and here liability is of B is of rupees 8,000. So here again 8,000. So 53 plus 8 will be 61. Student, you may note down this. Then we are going to see the next transaction. Let's see the next transaction. Rupees 6,000 paid for wages. So here journal entry that we are going to pass will be wages account debit to cash account. So here we are paying wages of rupees 6,000. So 6,000, and because of this wages, capital is going to be decreased, and cash is also going to be decreased. So here capital decrease as well as cash decrease. Here cash account is 38,000 minus wages of rupees 6,000. So here cash account is of rupees 32,000. Then there was a stock of rupees 13,000. Then there was a furniture that is of rupees 10,000. So here total of this will be 55,000 and capital of this was 53,000. From that we are going to deduct the wages and that is of rupees 6,000. So now the capital will be 47,000. That we are going to take 47,000 and liability of B, it was 8,000. So that is going to be continue. So here 47 plus 8, it will be 55. So that will be A is equal to C plus L. So that now let's see the next transaction. Next transaction is of 7, wages outstanding 1,000. So for wages outstanding, wages account debit to outstanding wages. For that wages capital is going to be decreased as well as liability is going to be increased. So here 7 number that we are going to write, it will be wages account debit to outstanding wages account. Here it is 1,000. For that capital decrease and liability increase. Here cash account is of how much? So cash account is 32,000. Then stock account is 13,000. Then furniture is of 10,000. So total will be 55,000 and capital was of 47,000. From that we are going to deduct wages of rupees 1,000. So that will be 46,000. And liability of B will be 8,000 and for outstanding wages will be 1,000. So total of liability is increased by 9,000. So this is the transaction number 7. Let's make the next transaction, and next transaction is of commission received. So when we are receiving commission, cash account debit to commission, so cash is going to be increased as well as capital is going to be increased. So for that 8 number commission cash account debit to commission. Cash account debit to commission account, and that will be 4,000 and 4,000. So here cash is going to be increased as well as capital is going to be increased. Cash account is of rupees 32,000 plus in the cash we are going to add the commission of rupees 4,000. So total of cash account will be 36,000. Then stock is of rupees 13,000. Then furniture of rupees 10,000. So here we can see the total of this will be 59,000. And capital is 46,000 plus commission of 4,000. So total will be 50,000. So total capital will be 50,000. And liability of A, liability of B will be 8,000. And outstanding wages will be 1,000. So total of liability will be 9,000. So here 50 plus 9. So total will be 59. So here again we can see that A is equal to C plus L. Now let's see the next transaction. Next transaction is a division receivable of rupees 9,000. So receivable dividend, to dividend that journal entry we are going to pass, and because of that asset is going to be increased and capital is also going to be increased. So here receivable dividend account to debit to dividend account. And for that rupees is 9,000. And here asset is going to be increased and capital is also going to be increased. Here cash will be same, that will be 36,000. Stock will be 13,000. Furniture will be 10,000. And here dividend receivable $9,000. So total of this will be 68,000. And here capital is of rupees 50,000 plus commission receivable, and it is 9,000. So total will be 59,000. And here liability of B 8,000 and outstanding wages will be 1,000. So total will be 9,000. So here again 59 plus 9, it will be 68. So here again we can see that total is equal, that is A is equal to C plus L. Now let's see the next transaction. Next transaction is machine purchase of 8,000. So machine account debit to cash, that journal entry we are going to pass. And because of this, machine is going to come in the business and cash is going to be going out of the business. So asset is going to be increased and cash is going to be decreased. So here cash account of rupees 36,000, and from that we are going to deduct machine of rupees 8,000. So now total cash account will be 28,000, and then there is a stock of rupees 13,000, then furniture of rupees 10,000, dividend receivable of 9,000, and here machine is going to be add. So machine is of rupees 8,000. So total will be again 68,000. And here capital of rupees 59,000. So that will be 59,000. And here liability of B 8,000 and outstanding wages of rupees 1,000. So total will be 9,000. So here 59 plus 9 will be 68,000. Student, you may note down this. Then we are going to see next transaction. Next transaction is transaction number 11. Land purchase from Radha of rupees 25,000. So land account debit to Radha. That journal entry we are going to pass. And here the amount is of rupees 25,000. Here asset is going to be increased and cash liability is going to be increased. Asset increase, liability also going to be increased. And here our asset is, cash account is 28,000. Then stock is of rupees 13,000. Furniture of rupees 10,000. Then dividend receivable is of rupees 9,000. Machine of rupees 8,000. And another asset called land is of rupees 25,000. So total of this will be 93,000. Again here rupees 59,000. So here total is 59 and liability of B will be 8,000 and outstanding wages will be 1,000. Land that we have purchased from Radha. So 25,000. So total 59 plus here it will be 34. So it will be 93. So this was the transaction number 11. Now let's see the transaction number 12. Borrowed bank loan of rupees 20,000 and cash withdrawn. So cash account debit to bank loan. That journal entry we are going to pass. Cash account debit to bank account, and for that rupees 20,000. So here cash increase and liability also increase. So here cash account was of rupees 28 plus loan of rupees 20,000. So that will be 28 plus 8, 48,000. Then stock of rupees 13,000. Then furniture of rupees 10,000. Then dividend receivable of rupees 9,000. Then machine of rupees 8,000 and land of rupees 25,000. So here we can see that the total of this will be 1,13,000, and here capital will be 59,000. So here it is capital. And now let's see liability of B. That will be 8,000. Then outstanding wages, that will be 1,000. Then Radha's liability, that is 25,000. And here the bank loan, that bank loan is of rupees 20,000. So total of this will be 54,000. So here again we can see that 59 plus 54, it will be 1,13,000. So here A is equal to C plus L. So this is how we supposed to solve the sum when they are asking us to solve the sum according to accounting equation. Thank you students for watching this video.